Hello and welcome back to Live from Paris. It's time now for a look at what's making the business news headlines with our business editor, Owen Fackler.
Hello, Lorna.
Right, so European markets have not long opened. What's going on?
I'm crossing my fingers today, Lorna. We might, maybe will we see the numbers ending in the green as they have done this morning. It's been a rotten, month. I was going to say week, but let's face it, this second quarter has been pretty miserable on stock markets. Let's look at those European numbers for you. All of the major markets opening around 0.5% in the green. Look out for Spain today. And a bond sale there, an important one, but when a bond sale is not important in Spain right now. Spain auctioning off around €2.5 billion of medium-term paper. Lots of analysts thinking that borrowing costs there will rise to about 5%. We can see there the European markets a little bit flat on the FTSE, but you can see the DAX and the CAC 40 opening in the green. On the Asian markets, a good day's trading there. Some decent figures from Japan. Lorna will have more on that in just a moment. That helped the Nikkei end the day around 0.1% in the green, so not spectacular gains, but not a bad day's trading given what we've seen over the past couple of weeks or so. And worth mentioning that Singapore's economy grew by 10%. That's 10% in just the first quarter of this year. Pretty impressive stuff.
Okay, yeah, definitely. And perhaps a contrast with Greece, of course, which is fast running out of friends here in Europe.
And money, it would seem, Lorna, if things continue the way they are over the first 2 days of this week, that's Monday and Tuesday. The Greeks withdrew collectively €1.2 billion from Greek banks. To put that in context for you, over the course of an average month, you might see between €2 and €3 billion taken out of Greek banks. So that's a third in just 2 days alone. Now, based on rough estimates, if that pattern of withdrawal were to continue, then you can reasonably assume that Greece would probably last for about another 3 to 4 months, given that there's around €165 billion of deposits in the banks. And the problem right now is, as you say, Greece is running out of frenzy in Europe. The ECB is effectively freezing its credit lines to Greek banks. There's a €25 billion pot of cash available to Greek banks under the terms of the second bailout, but the ECB has effectively frozen that. It's so concerned about the deteriorating condition there.
Okay, well, it seems then the ECB's pretty much given up any optimism it had over Greece.
Absolutely. At the start of the week, we had a leading European finance minister dismissing any talk of the Greeks exiting the euro as nonsense and propaganda. And yet the best that Mario Draghi, the head of the ECB, can offer right now is saying his strong preference is for Greece to remain in the euro. Hardly a ringing endorsement. Certainly not the kind of language we had from maybe a year ago, where these euro leaders were pretty confident that Greece would stay in the euro. Perhaps the soundbite of the day, though, goes to the UK Prime Minister David Cameron. He was speaking before the UK's Parliament and spelt out what he saw as the consequences for Europe of a Greek exit from the Eurozone.
If the Eurozone wants to continue as it is, then it has got to build a proper firewall. It's got to take steps to secure the weakest members of the Eurozone, or it's going to have to work out it has to go in a different direction. It either has to make up or it is looking at a potential breakup.
David Cameron there speaking in the UK Parliament. Well, we're going to move on to Japan now, because it managed to salvage something from a month which is really one to forget on world markets. Its latest figures suggest a turning point in its post-Fukushima crisis, but recent earnings from some of the most famous brand names in the world show just how tough conditions still remain. Here's Shirley Sitwell.
Japan is back on the growth track, but it's worried this may not last. For the third quarter in a row, growth is positive. With 1%, the country is doing better than expected, better than many other developed countries. It has increased its exports by 2.9%, sold more on its own market.
This growth can be explained by personal consumption going up due to eco-car subsidies, as well as by investment related to rebuilding in the wake of last year's disasters. The effects of the Thai floods have receded, and the U.S. economy has also recovered to help exports.
Yet even in the government, many are worried about the future. Will growth continue once Japan completes reconstruction work in the Northeast? Once purchasing incentives are gone? The Japanese are concerned about the value of their currency. The yen keeps increasing and weighing down on exports. Exports are also threatened by the debt crisis in Europe, one of Japan's biggest clients.
It is expected to continue. However, it is necessary to beware of the risks posed by the reappearance of financial instability in Europe.
Japan's own debt has also increased and is now at more than 200% of GDP.
Well, finding those kind of growth numbers is one of the challenges for France's new finance minister, Pierre Moscovici. He's just been named to that post by, of course, the new president here, François Hollande. French influence is crucial in key Eurozone decisions when you come to think about situations like Greece. But with 0% growth in the last quarter, France urgently needs attention on the home front.
François Hollande gave his new finance minister a mission, restarting the economy, but not through austerity. As Pierre Moscovici takes on the job, France's industries are less competitive than the European average, and less than Europe's first economy, Germany. Working costs in France are about 13.6% higher than in Germany, and the French president has no intention of making work more flexible. On the contrary, Hollande wants to preserve workers' rights, increase minimum salaries, and end the tax breaks granted to companies by his predecessor Nicolas Sarkozy. Hollande says he'll boost the economy by a redistribution of wealth.
In concrete terms, growth comes about by helping families pay their bills. It comes about by creating jobs in the public sector and by tackling unemployment with more social policies. It happens through not cutting so many public sector jobs and by financially helping low-income families.
Although Hollande wants to balance the budget by raising taxes on companies and the rich, he insists he's not against business. All the ministers he chose to head the finance, budget and work ministries are moderates. He created a ministry devoted to improving French industries and vowed to create an investment bank and give more money to research. To finance these measures, France will have to borrow more money. Its borrowing costs are now twice as high as Germany's. The new finance minister is a devout European. Twice MEP and former European Affairs Junior Minister, he plans to sell Hollande's growth strategy to countries across the EU.
And just on that story, worth noting that Monsieur Moscovici has been telling French media this morning that the European Budget Treaty will not be ratified without some sort of growth chapter put into that. Remember, that's been the sticking point between France and Germany on the austerity versus growth debate. OK, let's pick up on a little bit more of the day's company news for you now, starting with Total, which has successfully plugged a gas leak in the North Sea nearly 2 months after it first erupted. The French oil producer says it pumped heavy mud into the breach at the Elgin platform off Scotland's coast to stem the flow of gas. Credit agency Fitch has previously estimated the cost of the accident to be nearly €6 billion.
Berlin's new airport isn't likely to open until March next year. That's according to sources quoted by Reuters. It means the German capital's new €2.5 billion hub will have pushed back its opening by nearly a year from the original date of the 3rd of June. Problems with fire regulations are to blame for the latest setback, on top of delays with installing automatic security systems.
And US sports shoes maker Skechers has paid $50 million to settle misleading claims about its latest line. Trade authorities said Skechers' claims that toning shoes would help wearers get stronger and lose weight were unfounded. Skechers had denied the charge but says it's settled to avoid a lengthy legal battle. Not that old chestnut. Wearing sexy athletic shoes will help you get stronger and lose weight. I think you actually have to do the running, don't you, and sweat a bit.
Oh, it looks like those people are. That's why they've got such beautiful bodies. Right?
I noticed Britney Spears, though, when she was advertising them, I don't think she looked too sweaty, did she? She seems to always look very pristine in Skechers.
Well, thanks very much indeed, Owen, for that look at today's business news. And that's just about it from us for now. But don't go away. Stuart Norval will be here after the weather with more news headlines. Thanks for joining us.